In this video, I'm going to do a deep dive into DSCR loans so you'll know exactly how these loans work and if a DSCR loan is going to be the right fit for you and the best option for you in your real estate endeavors. And if you stick around to the very end of this video, I'm going to share with you a DSCR lender that only requires 15% down and is currently lending in 12 states across the nation, with more on the way. My name is Art Smith. Welcome to this channel. And on this channel, we help real estate investors finance rental property. So if you're eager to learn more about real estate finance, do me a favor and subscribe to the channel, because on this channel I love to help individuals build wealth, create financial freedom, and break generational curses. Now, what are DSCR loans? Now, DSCR loans are going to be a business purpose loan specifically for real estate investors. Now, these DSCR loans, they don't fall into the same bucket as conventional financing or traditional financing. They are in a separate bucket I like to call the alternative doc bucket versus the full doc bucket that conventional loans are. But these are going to be alternative doc loans and fall into a separate bucket for specifically real estate investors. Now, since these loans are alternative doc loans and they're business purpose loans for individuals who are looking to invest into real estate and not occupy the residence as their primary residence, that helps with the underwriting process or the overall loan origination process, because these loans are not as heavily scrutinized and regulated as traditional loans. A traditional home loan will use your income and employment to determine if you can afford the monthly payment of your mortgage, where DSCR loans do not. Now, the cool thing about DSCR loans is that they use the actual or fair market rent of a specific zip code or area that you're looking to invest in as a qualifying factor to determine if they should actually lend to you. And as long as the actual or fair market rent is greater than your monthly mortgage payment that's going to be attached to your new loan that you're going to be getting on these DSCR loans, then you are one step closer into getting a loan approval. So this makes DSCR loans a little bit more risky to the lender, not necessarily to you, because you're not using your personal income as collateral for this loan. You could have no income on paper and lenders will still lend to you as long as the property cash flows. Now, who are DSCR loans for? As I already specified, DSCR loans are going to be for real estate investors, but to be a little bit more specific, here's a list of individuals or situations that DSCR loans are a perfect fit for. All right, so first on the list, we have business owners, independent contractors, or self-employed individuals who have a decent amount of income on an annual basis, but also do have a lot of write-offs. So when it comes to looking at your tax returns, you have a perceived low income on an annual basis because of all of the write-offs. So if these individuals are looking to invest into real estate and you can't get a traditional conventional loan because your income is a little bit too low for that traditional lender's qualifications, then DSCR loans are going to be a great fit for you if you are a business owner, independent contractor, or self-employed individual with low taxable income on your tax returns. DSCR loans are also good for real estate investors who are capped at 10 conventional loans. As you may already know, you could only have 10 conventional loans to your name and or social security number. So if you have reached that maximum of conventional loans, then DSCR loans are a great alternative for you so that you could continue to invest. For nationals or out of country investors who are looking to invest into American real estate, DSCR loans are going to be great for them. Matter of fact, foreign national loans are DSCR loans. They undergo the same underwriting process. Also, borrowers with multiple streams of income. Now, this kind of falls in line with the business owner or the serial business owner, individuals who have multiple streams of income coming in from different sources, different 1099s. Now, this makes it hard for them to qualify for traditional conventional financing because lenders don't like to see a variety of different income sources. They like to see one income source that is consistent for a 2-year minimum. Now, again, if you are a serial entrepreneur or serial business owner with multiple streams of income, DSCR loans are going to be a great fit for you. And lastly, individuals who are newly employed. Now, just like I stated, conventional traditional loans, they require a 2-year minimum in order to qualify for financing the traditional way. If you are newly employed but you have a high salary and you want to start to invest and start to build wealth and offset that high taxable income, then DSCR loans are going to be a great option for you. Now, how do I qualify for a DSCR loan? So believe it or not, DSCR loans are a lot easier to qualify for, but you still need to meet the lender's guidelines. So in order to qualify for these types of loans, you have to meet the lender's minimum credit score, down payment, reserve, and cash flow requirements. And if you meet those minimums, then you are one step closer and you will qualify for these types of loans. So let's go over some of the minimum requirements for DSCR loans. Now, standard minimum down payment for DSCR loans is going to be 20%. However, after you have built a relationship with a specific DSCR lender and you are known to close on time and pay your bills on time, then they are more inclined to dropping that down payment requirement or that minimum down payment requirement from 20% down to 15 and possibly even 10 if you have multiple loans with them. And again, you're paying on time with every single one of their loans that you have taken out with that lender. For minimum credit score requirements, some banks, some lenders go as low as 600 on these DSCR loans. But do keep in mind, if you have a 600, 650, 680 credit score, you are going to have a higher interest rate and you are going to be paying more at closing in the form of lender fees or processing fees because you are a more risky borrower than somebody who has a higher credit score. So if you can get your credit score above 700, preferably above 740 to get the best possible financing, best possible rates, and get the lowest possible closing costs when it comes to originating these loans. But if your credit score is, let's just say, the mid 600s to the high 600s, 680, 690, don't be discouraged if you don't have a credit score higher than 700 because lenders will still lend to you. And again, as you start to borrow more money from them, close more transactions, pay your bills on time, you're going to build a positive relationship with that specific lender. So they're going to give you more favorable terms and rates as you go along and continue to do business with them. Now, cash flow or debt service coverage ratio, as we like to call it in the industry, is a simple math equation that lenders like to use to determine if you can get a loan approval. And that math equation is as follows, and do me a favor, remember this if you want to start using DSCR loans because they're going to use this every single time that you bring them an application. And that math equation is going to be rent divided by PITI. Now, rent is either the fair market rent that you're going to be receiving, or it's going to be the actual rent that you actually receive from that tenant on a monthly basis. And this is typically given to you on a ledger or a rent roll, as what we like to call it. Now, if you're buying a house that's already tenant occupied, you should be receiving a rent roll from them. And this is what you're going to be using to qualify for a DSCR loan. And PITI stands for principal, interest, taxes, property taxes, and homeowners insurance. And that is also known as your monthly mortgage payment. So again, that math equation is going to be your actual or fair market rent divided by your principal, interest, taxes, and insurance. Now, after doing the math, and that number equals to a number greater than 100% or 1.0, then congratulations, you are one step closer to getting a loan approved. However, if that number is less than 100% or less than 1.0, then that means that you're negatively cash flowing, and many lenders will not lend to you in this situation because you are negatively cash flowing. And the lenders that do decide to lend to you, again, they're going to be charging you more points up front or a higher interest rate over the duration of your term. So just kind of keep that in mind. It's going to be more expensive for you because not only are you paying the difference out of pocket every single month, but also you're going to be paying a higher interest rate, higher closing costs, higher processing fees, higher lending fees in this situation. And lastly, most DSCR lenders are going to require a 3-month minimum of reserves. Now, one reserve is going to equate to 1 month's worth of PITI. Again, that's going to be principal, interest, taxes, and insurance. So one reserve is going to equal to 1 month's worth of mortgage payment. All right, so let's do some math here. So let's just say if your monthly mortgage payment is $1,500 per month, your principal, interest, taxes, and insurance. So if the lender wants to see a minimum of 3 months of reserves, just times that by 3. So the lender is going to want to see $4,500 in your bank account for the past 3 months or 3 bank statements or 3 bank statement cycles in your bank account at the time of closing to originate and approve this loan. So that's kind of what reserves are, and that's an example of some reserves. Some lenders only require 1 month of reserves, some lenders require 3 months, and some other lenders require 6 months. So it is really dependent on the lender in this specific situation, but you do need some type of reserves in order to originate these types of loans. All right, so what are the pros and cons to DSCR loans? All right, so some of the pros for a DSCR loan is you don't need any income or job verification in order to qualify for these types of loans. Also, you could take out as many DSCR loans as you want to your name or to your social security number, or even hold it in an LLC or a revocable trust. Those are some of the pros. Also, another pro is you have no hard pull or credit check for some lenders for these DSCR loans. And it's also a good alternative for foreign nationals or individuals with very little paper trail or no paper trail when it comes to income and you want to start investing into real estate. Now, the cons for DSCR loans are you cannot use them on a primary residence, and for some lenders, you can't even use them on a second home. They really want to only lend to real estate investors who are going to buy a house for investment purposes. So someone else is going to be paying your mortgage and your principal, interest, taxes, and insurance, as opposed to you out of your own pocket and out of your own income from your job. They really don't want to lend to individuals who plan on either living in it or using it as a vacation home. Another con is going to be the interest rate. You're going to have higher interest rates on DSCR loans in comparison to traditional conventional financing. And that's about it as far as the cons for DSCR loans, just the higher cost and the inability to use them on primary residences or vacation homes. Now, where do I find DSCR lenders? Now, DSCR lenders are very easy to find. Matter of fact, if you have a computer, then you could just type in a DSCR loan or DSCR lender near me into your web browser, and you're going to find a wide variety of different DSCR lenders in your local area. However, finding one that's going to be the right fit for you as far as your minimum loan amount, or maybe your experience level, or maybe even your specific situation as far as how you plan on holding title or bringing partners into the transaction, that may be a little bit harder for you to find. That may be a little bit more of a challenge because DSCR lenders, they're notorious for not picking up the phone when you actually give them a call. So in my personal experience, I actually have a list of over a dozen DSCR lenders, and the best DSCR lenders that I have found have been through either real estate investing or note trade shows and conventions, because at these conventions and trade shows, you'll tend to find a little bit more of a ma and pa type DSCR lender or loan originator or loan officer at these type of trade shows and conventions, and they're more willing to work with a first-time real estate investor or someone who has a lot of questions, and they will have the patience for you and kind of walk you through that process. So yes, you could find a DSCR lender by just simply searching online on Google. However, through my experience, the best DSCR lenders that I have found are going to be the mid-size to smaller size lenders and investors. These are the individuals who are going to have a lot more patience for you and going to help you or hold your hand through the process when it comes to originating DSCR loans. All right, so if you made it this far into the video, first and foremost, thank you. And secondly, here is the DSCR lender as promised at the beginning of this video that is offering 15% down and that is doing great business across the nation right now. And that lender is Angel Oak Mortgage Solutions. Now, Angel Oak offers a DSCR loan with a minimum down of 15%. Their loan amounts go all the way up to $3 million, have a minimum FICO score of 680, and do lend on short-term rental properties. So if you have an Airbnb or a VRBO, Angel Oak will lend to you, as well as long-term and mid-term rentals as well too. As long as your cash flow is serving your minimum monthly debt, you will have a guaranteed loan approval as long as all other minimum requirements are met. I will link Angel Oak's DSCR program in the description box below for you to check out later. And if you enjoyed this video thus far, do me a favor and hit that like button so that YouTube knows that this is really good content and can be shared and distributed to more people just like us. And if you haven't done so already, do me a favor and subscribe to the channel as I start to release more content as it relates to real estate and real estate finance. And of course, if you have any questions, don't hesitate to drop them in the comment section below. And if there's anything that you want to reach out to me privately about, I will put my email in the description box below. Other than that, thank you so much for watching yet another video, and I will catch you on the next one.